Hello, everyone, and welcome to this episode of Coffee with Carl. I am your host, Carl Zoellner, one of the attorneys here with Anderson Business Advisors. I want to thank you for joining me for another episode. Today, I want to talk about some uses and alternative uses for our management company within our business entity structure. For most of our clients, if you have real estate, we're talking about your corporation, which we affectionately refer to as our management company most times. But there is some other things you can do with it depending on how diversified you are in your investing or what other types of activities are involved with that management company. So, first and foremost, like I said, welcome to Coffee with Carl. Today it's going to be a little bit of Coca-Cola with Carl. So I got my Coke Zero here. And we're going to talk a little bit about that company. So, for most of our clients who are doing or who are investing in real estate, the corporation sort of has two purposes. One, corporation is going to be your tax deduction vehicle. The corporation runs on a separate tax code, the corporate tax code, or a separate portion of that tax code, and we are able to take some tax benefit out when having some interplay between us as individuals as well as the corporation. Things like deductions that aren't available to us as individuals. Being able to work reimbursements where normally as individuals things wouldn't be deductible to us. So when we start managing our rental properties with that corporation, it's to get that intermingling, not from an asset protection side, but an intermingling of those two tax codes or two sections of the tax codes, so that we're able to find some tax deductions in there or some things that are reimbursable, like I said. So, number one use for that corporate entity or that company that's doing your active business would be property management. Other things that active business could be paid for is anything you can pay another business doing the same type of activity a reasonable amount for. So if you would have paid a company for, say, marketing services, consulting services, even different types of management services outside of property management, that corporation can draw a fee for that. So this is one of our biggest questions because everybody wants to know, once they start taking advantage of some of the different things you can do in the corporate tax code, how do I get more money to my corporation? Another area of use for that corporation is direct investment. So with that management entity, so we're moving away from property management. Now we've got a corporate entity. What types of business does that corporate entity do? Number one is, if you're doing real estate, that is where we're running some of our flip and wholesale income through. We can even do lending out of our corporation. You could potentially invest in syndications. I would say we'd want to dial in the tax numbers on that, though, because ultimately, unless you have enough reimbursements or deductions built up, you may be paying a little extra tax from that area. But basically, that corporation can also be used for direct investment that results in active income and should be involved in that. So things like property development, anything where you basically go in and say, I'm entering into this deal with the intent to make a profit and sell this property. So if you're going in and with the intent to sell, that should be running through the corporation so you can avoid what's referred to as, or not referred to, what's called dealer status, because that can be a real bummer for your passive investments. So we want to run those things through the corporation. So lots of different uses for that corporation. I know we sort of get the blinders on when we start talking about your management entity. Can it only do property management? Nope. We don't limit the drafting of that entity unless there's a lender or something that requires us to limit it to, say, a single purpose. We generally draft our corporations for any legal purpose to give you that flexibility. Most common scenario I'll leave you with today is an investor has some real estate and also has a brokerage account, wants to take the tax benefits out of both. So you use that corporation as a partner in an LLC that also gets a guaranteed payment to partner, which allows you to deduct many things an individual couldn't through your trading activities. And then if for your real estate, if you're going to manage it, that same corporation can still manage your real estate. So corporation within your entity mix can be a very valuable tool. Hopefully this cleared up some of the information or some of the questions y'all may have. If not, please feel free to reach out. If you're not yet a client, more than welcome to reach out for your initial consultation. If you're already a platinum client, you're more than welcome to reach out to us anytime and happy to chat with you. So that's it for this episode of Coffee with Carl. It was great spending some time with you, drinking my Coca-Cola today. And it's a little chilly out, so I was wearing my sweater of my undergrad alma mater, the Colorado Buffaloes. So go Buffs. And so until next time, please keep taking advantage of all of our free content out there. Take a look at Tony Talks. Of course, Toby, Clint, and Michael are always putting out great stuff. So make sure you're taking advantage of all that free education out there. And we will catch you on the next episode of Coffee with Carl. Thanks, everyone.